Investment Report, New Era Helium Executive Summary and Investment Thesis Company Snapshot. New Era Helium is a privately held energy company focused on the exploration, production, and commercialization of helium resources in the United States. Its strategy centers on developing domestic helium assets to address a global shortage of this critical gas. Helium is essential in industries like healthcare MRI machines, semiconductors, aerospace, defense, and scientific research. Investment thesis, bull case. The helium supply-demand imbalance presents significant upside potential for domestic producers. New Era Helium benefits from a U.S.-based asset portfolio at a time when geopolitical risks threaten helium supply from Russia, Qatar, and other foreign producers. If the company successfully scales production, it could achieve strong pricing power and secure long-term contracts with key industries. Bear case. The company is early stage and has limited operating history, which raises uncertainty around scalability, execution, and long-term profitability. Significant capital expenditure requirements and potential commodity price volatility add downside risks. Final recommendation: speculative by high risk, high reward. For investors with a tolerance for early-stage resource exposure, the structural tailwinds in the helium market support upside. Business overview: core operations, exploration and production of helium reserves, with a focus on U.S. projects in resource-rich basins. Key products, services, raw helium extraction, processing, and potential long-term supply agreements. Primary markets: healthcare, aerospace, semiconductor manufacturing, defense, and industrial applications. Industry and competitive positioning: industry landscape. Global helium demand is rising, driven by semiconductor production, space exploration, and medical imaging. Supply remains constrained due to geopolitical instability and limited new sources coming online. Growth drivers: rising demand from chip makers and aerospace companies, U.S. strategic push to secure domestic helium supplies. Headwinds: high capital intensity of exploration and processing facilities, commodity price swings, and potential demand substitution. If helium recycling technologies advance. Competitive moat: location advantage in U.S. reserves. Potential long-term contracts could create barriers to entry. However, moat remains unproven until operations scale. Financial analysis note: as a private company, full audited financials are not publicly available. Below is based on reported information and industry assumptions. Revenue and net income trends. Early stage, limited commercial revenue to date. Revenue growth is expected post-production ramp. EBITDA and margins: negative in pre-production phase. Margins will depend on helium spot and contract pricing. Financial health: debt to equity, likely elevated due to project financing requirements. Current ratio: dependent on fundraising cycles and liquidity. Free cash flow: negative until production stabilizes. Efficiency metrics: ROE, currently not meaningful given early stage status. Valuation: valuation multiples, not directly available. Private company. Public comparables: Air Products, Lind, ExxonMobil's helium units, trade at PE 20 by -30x. EBITDA 10x1 for XPB, 3x5x rationale. If New Era Helium achieves steady-state production, valuation could re-rate closer to specialty gas peers. Currently, valuation would be speculative and project-based. Risk assessment: macroeconomic risks. Global recession could reduce demand for helium-intensive industries. Regulatory risks: U.S. environmental and drilling regulations could delay or restrict production. Competitive risks: larger integrated players, for example, Lind, Air Products, could dominate contracts with economies of scale. Company-specific risks: execution risk in bringing projects online. Financing risk for large-scale capex, lack of operating history. Upcoming catalysts: progress updates on drilling and production, announcements of long-term supply contracts, potential strategic partnerships or funding rounds. Conclusion recommendation: speculative by supporting points. Strong demand tailwinds for helium in critical industries. U.S.-based reserves provide geopolitical advantage. Potential for long-term contracts at premium pricing. Guys, Early-stage execution and financing risks. Dependence on commodity prices. Limited financial transparency as a private company. Final note, investors should treat this as a higher-risk, higher-reward play in the critical materials sector. Success hinges on New Era Helium's ability to execute on production, secure offtake agreements, and manage financing efficiently. Disclaimer: this analysis is based on publicly available and historical information. It does not use real-time financial data, and New Era Helium is a private company with limited disclosures. Investors must verify current data, filings, and developments before making any investment decision.